Hey, this is Victor. In this video, I'm going to cover Hewlett Packard. This is a company that just released their earnings at the beginning of last week, and they had a very good earnings call. Their stock went up in price. I continue to have a positive rating on this stock. It is one of my large positions, and I really like this stock. I like this company, and will continue to buy shares in this stock. I'd like to tell you why, and I'd like to go over their earnings announcement, their stock price, and my plans with this stock. So Hewlett Packard on the 31st of May announced their earnings. They had about 4% revenue growth, and that's on top of just a really nice 2-year run where they've grown quite a bit because people have been buying new PCs, new systems for home, cameras, microphones, all kinds of technology to make their home offices or their business offices or their educational offices, all things that need a computer. Hewlett Packard benefits when people are updating their technology. So very good earnings of their top line, profitable, cash generating, and they've been buying back shares as well as paying dividends. So overall, a very good earnings release. The cash back, they had free cash flow of $350 million in Q2. Their fiscal quarter ended at the end of April. So they have a fiscal year that doesn't run with the calendar year. Free cash flow, they're expecting at least $4.5 billion for their fiscal year 2022. I'm going to use that number in my valuation of the company. Their guidance for the year, they're going to guide to be profitable. They're going to grow. And again, generate free cash flow of $4.5 billion. I believe Hewlett Packard is discounted by 68%. Here's my numbers that substantiate that discount. First, I'm using the most conservative. 4.5 billion is what they're expecting, at least 4.5 billion of free cash flow in fiscal year 2022. So using that number and then growing it very modestly at 5% over years 2, 3, 4. And then after that, long-term growth of 2%. So that's very conservative growth rates. And then using their weighted average cost of capital based on the Finbox weighted average cost of capital that's listed for Hewlett Packard. I discount the future cash flows I expect and get a valuation of the company of $70 billion. But the company has a market cap of just under $42 billion. So it leaves a nice discount of 68% on the stock. And that's why I continue to be a holder of the stock and continue to want to buy more shares of this very valuable company. So Hewlett Packard over the last 5 years has had a really nice rise, really nice, you can call it consistent rise because you can see that if you drew a straight line, it'd be a nice upward trend. But as with many tech stocks, it's had its volatility. And especially this year, you've seen the stock go up and down quite a bit. Overall up 4.71% up year to date, which is way better than most technology companies and has been paying a nice dividend. So I like volatility because it allows an investor like me to buy on dips and then I get a discount overall. So the stock overall over the last 5 years has been going up and it's provided a lot of volatility, opening up opportunities to buy low. So Hewlett Packard is a nice, consistent, dividend-paying, profitable, cash flow generating company. I really like holding companies like this because it's going to just rise over time. It's going to pay me back for that dividend, buy back shares. All those things happen, which I love to see in a company. Their growth this fiscal year, 4% over Q2 of this current fiscal year, 9% for Q1. Last year, they grew 12%. A nice low PE of 7.14, market cap of just under 42 billion, and they produced free cash flow of 5.8 billion in 2021, therefore making it an 11% free cash flow yielding company. Really nice yield. And again, the dividend is 2.51%. They're guiding that they're going to generate at least 4.5 billion in free cash flow. They're going to be profitable and grow. Warren Buffett's an investor, so that's good to see. It gives the stock price a little more credibility on the street, and I'm sure it's attracted more investors since Warren Buffett started buying into the company. I really like this company. It has moderate upside and a good dividend. I'm going to continue to buy shares into Hewlett Packard. So please keep in mind, this video is for entertainment purposes only. I'm not recommending you buy Hewlett Packard or any other security. This video covers why I invested in Hewlett Packard, and I hope you found it interesting. That covers my investment in Hewlett Packard. Please give me some comments. Let me know if you also are an investor of Hewlett Packard. If you disagree or have any constructive feedback for me, I'd love to hear it. Want to continue to get better as an investor and get better at investing in Hewlett Packard specifically. So any comments are welcome. Thank you so much for watching. Let me wish you the best of success in investing in 2022.